Alright guys, this is Pete here. Just want to give you guys a super short and quick update on the 5th of September. Alright, this is usually for the premium paying members, but I thought this is also good information that I should pump it out to the public, right, to make sure that you guys are understanding what's happening in the market. Okay, so very quickly, alright, so I always like to go into the economics of the things, right, not to look at the price action of the market. In fact, we'll do that the last. Okay, so yesterday, very important day. Why? Because we get all our unemployment rates, our non-farm payroll employment rates, and so on and so forth. All right, now the key thing I want you to understand is this: unemployment rate, while it's still high, right, we saw close to 1 million unemployment, but we are seeing that it continues to dip down, and in fact this is our first time dipping down. This is for US, right, less than double digit. All right, it's at 8.4%. all right, 8.4%. And the number of unemployment persons, all right, fell by 2.8 million. What does that mean? That means these people either found a job or they have started a business. Okay, so either way, this is great news for the economy. And for both measures, right, the unemployment rate and the employment people have declined for 4 consecutive months. Okay, so this is improving signs that the economy is recovering, employment is increasing, or people are going back to entrepreneurship, starting business. This is great, right? The next thing I want to share is, don't just look at unemployment rate. How about the other side of the same coin? Employment rate, all right? And I just want to bring you to the most important figure here, total employment. And they use this by household survey. Now, why I prefer this as opposed to them asking businesses is because when it's a household survey, you cover a lot more of the small businesses, or they could be self-employed in certain way, all right? So it went up by 3.8 million. No, just now we talk about 2.8, but actually when you look at household level, including the smaller businesses, it actually went up by 3.8 million people. Okay, 3.8 million people. And right now we are seeing employment ratio to population, okay, rising to 56.4% already. Okay, 56.4. And you can see that no matter you are working full-time or working part-time in the US, the numbers has been increasing. All right, so another indicator just came out recently is the new car sales. All right, and new car sales continues to go up. All right, so we will expect it to eventually hit this level if everything is steady state. So now we are at the range of about 15.5 million car sales. This is new car. This is not like resale. This is just new car sales. Okay, so these are very strong indicators about people's spending power and going ahead to revive the economy, right? The other one that I really like and I depend a lot is the manufacturing ISM, all right, by the PMI index, okay, and it is now at 56%. All right, above 50% we are healthy. Before that we are below 50, and now we are above at 56%. Now, what constitutes this 56%? Now, to give you a very quick glance, right, this is the breakdown by PMI, right? So in July we saw 54, and then in August we saw 56. That means these purchasing managers are getting more confident, all right, that their goods can sell. That's why they're buying more. Okay, and you can see across the board the new orders went up to even 67%. Okay, 67%. And you can see they are all growing. In fact, the only thing that I find interesting is this: inventory levels continues to drop. That means the businesses are playing catch up. They are not able to meet the demand. That's why it is dropping. All right, it's dropping. And they talk about customers inventory too low. Right, I don't know what that even means. Usually I only see growing and contracting, but this is the first time actually I see too low. Quite interesting. Yeah, okay, so you can see also backlog of orders. All right, backlog of orders also increasing. That means really the demand is high and the supply is unable to meet the demand. Now, the most interesting thing is this: now, some people say, hey, maybe your manufacturing is only a certain industry that's doing well, but out of the 18 manufacturing industries, about 15 of them reported growth in this month. Okay, so that is a general, once again I say, a general market advancement that is very good. Okay, so the next thing I want to come to is some people ask me, hey Pete, how about the U curve? What's the U curve saying? And I just want to share with you. Now, I really like the U curve as an indicator. In fact, when I first saw it dip below this level in 2019, I was a bit concerned, right? And true enough, when COVID-19 came, and then the market just collapsed, right? But right now we are seeing that the yield curve inversion. All right, so for those of you who don't understand, when it's below the red line means the yield curve, right, is not looking like this. Okay, instead the yield curve is looking like this. All right, this is the yield curve inversion, when your long-term treasury yield is actually lower than your near-term treasury yield. Okay, that's when it goes below the red line. And you can see that the inverted yield curve, right, has predicted about 7 of the past crises, market recession. And we already have it, and we had our market crisis. So now we are back up again. Seems pretty healthy to me. Now the thing is this: does this definitively tell you that we are already out of the woods? The answer is no, right? But at least we know that right now the yield curve is in a healthy state. Okay, it's in a healthy state. Now, why is it in a healthy state? Is because, right, when you have a 30-year bond, people expected to pay more because they are asked to be locked in for a longer period of time. All right. Whereas if you know that you're going to get your money back in 1 month's time, then your yield is going to be very low because there's a lot of certainty. All right, there's a lot of certainty. But when something is wrong, when the market, everybody pile into near-term treasury yields because they are not sure about the market, guess what? It inverts. So right now we are seeing a healthy treasury yield curve, okay, as of September this year. Okay. So with that said, right, let's jump back to the chart. So that's when I finally look at the chart. So just now we look at unemployment numbers, employment numbers, non-farm payroll, yield curve. It all seems to be quite healthy. So hey guys, can I just ask you guys for a favor, right? If you saw any negative results, all right, that points to a market that is not recovering well, please do me a favor, put in the comments below, because I always want to look for this confirming evidence that I could be potentially wrong. All right, and that's something that I learned from talking to all the best investors in the world, is that never assume that you're always right. Right? So if you guys have any information that points in the other direction, that the market is going to collapse soon, the economy is not doing well, please do me a favor, do everyone in the community a favor, put in the comments, and then I'll make sure I'll do a post on this and share with everybody else. Okay? Now back to the charts. You can see this is S&P 500. We have been going up. And honestly, I don't find the recent correction any surprising. Pretty normal actually, right? In fact, I'm super happy. Right? I was telling some of my students that I'm smiling as I saw the market crash. Why? Because if the markets keep on going parabolic like this and doesn't come down, that is when it gets scary. Okay, because on a bull run, all right, as the bull run up, the bull also needs to take a break and breathe. Okay, so this is the breathing. Do you see that? We had it in June, we had it in July, we had a small one in August, and now we had a bigger one in September. Not surprising, right? April we also had one, May, June we also had one. Okay, see, it's normal. So in fact, this correction, so long it doesn't break through any critical levels, it tells me that this is a healthy bull market, right? Whereby the market advance, retreat, but overall it advances. Okay, not just S&P. Let's look at the tech index, the Nasdaq Composite. Once again, right, you can see very clearly it is a very nice step up motion like this. Okay, breathe in, breathe out, breathe in, breathe out, breathe in, breathe out. Right? So bull run, run up, slow down, run up, slow down, normal. Okay, normal. In fact, if the market goes like this, that's when it's unsustainable. So actually, I like the fact that the market is having a bit of correction, retreating a bit, all right, to consolidate, shake out the weak holders, and then advance again. Okay, so that's all I have to share with you guys. I promise it will be a short session. Once again, let me know if you find anything that is wrong about the market, that you think it points in that direction, and I'll see you guys in the next video.